Well, joining me for this conversation is Josh Linville, Vice President of Fertilizer over at StoneX Financial. We're recording this the day before Thanksgiving. Got quite of a brisk cool off for this week, Josh. Going to be a little bit cold for some producers trying to finish up some fall application here.
Yeah, and that's the unfortunate part of it. It looks like we got a couple more moisture events that are possible through the Midwest, and it has not been a great fall run to start. Most of the areas have not really done much of anything in November. Maybe by this point, we've got about 5 days in the field. That's not enough. They can do a lot of stuff in a short amount of time, but not that short. So we're really crossing our fingers that yes, it can be cool. Yes, it can be all the things, but let's keep all that rain and snow at bay for just a little bit longer.
For sure. And that's what I want to talk about first here too, is I know we want to talk about tariffs because that seemed to be the big thing this week about Donald Trump's announcement on when he plans on getting in office with what the heck is going to go on with our trade here moving forward. But before that news came out here this week, I really want to dig into just the application side of things. And that is, of course, last year we had record application for guys getting in the field, getting that product in the ground and not really having to do much in the spring. However, this year it's just been a challenge because it wasn't the harvesting that got in the way of fall application. It was just this dry spell of uh just dry conditions that kept guys out of the field because you can't apply during that. And then when November came, you had total script flip and it was too wet. And it just seems like a lot of this is happening. So what are we looking at here as, again, you mentioned we're still having a little bit of that challenge, but trying to move from a record fall application last year to what we're going to get this year and how that's going to impact spring.
Yeah, last fall will be the one we always talk about. There's always these points in the calendar, these points in history you point back to and said, man, that was a good one. Man, that was a great one. That will be the fall we always talk about because to your point, harvest was done, the temperatures dropped, the soil levels, temperatures dropped. Guys got in the beginning of November. There was just enough timely rain to give them a break and get recharged. And it rained clear up until about Christmas. To your point, this year, October, incredibly dry. All of the different things out there is slowing and stopping this thing, and now it's too wet. And yeah, yeah, to your point, we're the day before Thanksgiving. Most of the Midwest only really got in the fields last Thursday, Friday, and they're talking more rain chances today. They're talking more snow, and we are running the risk that we just may have a very, very, very poor fall run. And so it's going to depend a little bit on which product we're looking at. If we're looking at dry phosphate potash, if we don't get it applied, that is easier to go over the top of frozen ground. As long as you don't have snow piled up, as long as you're not going to break through and mud yourself in or something like that, you can go on frozen ground. So you can make up some differences in December, January, February. And hydrous is where it gets tough. One more rain event. If it starts to freeze, we're done. And we had expected about a 2.1, 2.2 million ton fall anhydrous run. We're well short of that today. And the general rule of thumb is for every ton of anhydrous that does not get put on the fall, 25% goes to urea, 25% goes to UAN, and 50% stays anhydrous and gets dumped right on top of an already massive spring season. And that's where we start to get worried is we start looking at spring. If we have a poor fall and we put that on top of spring, it's a little bit of like, do you build a church for Easter at Christmas or do you build it for your regular Sunday? Our anhydrous system is built for your regular Sunday for a normal fall spring split. If we have a bad fall run, we've got Christmas and Easter to deal with. We are busting at the seams. We'll shove everybody in. We've got people standing in the back, but it's going to be tough.
And how is that going to affect the price side of things? Because I mean, you're shifting your demand schedule back a little bit farther. I know some guys acquired a lot of these supplies for the fall application, but how is that going to affect the spring in terms of what people might be in demand for that?
It's you will see the anhydrous system look at the demand and basically say we may not be able to get all this done. The market's role is to balance the S&D. And if it's looking at demand, say, holy heck, we just got all this demand from fall placed on top. Demand is way up here, but supply side, I can only get this done. And that number is going to change based on do we start in early March, middle of March? Do we stay wet and cold until April 1? That supply availability is going to shift up and down. And so if it gets to where all of a sudden we don't have enough supply to meet that demand, now the market says, well, I can't fix supply. I can only do so much. So my next step is I need to change the demand. And how do you do that? You raise the price until somebody says, Uncle, okay, I'll switch to urea, I'll switch to UAN, I'll switch to another nitrogen product, or maybe I switch away from corn or wheat or whatever I'm putting that nitrogen on.
Yeah, and even after that, I mean, you're looking at the weather, and and it kind of seems like you have a little less room for error in terms of what we can do in terms of what weather events come after the winter and after moving into that next actual application slash planting season.
Yeah, Mother Nature is tough in the fall. She is fickle at best in the spring. You may see yourself going March 1st, and everything is wide open, and everybody's shocked, and everybody's going, "It's fantastic." You may not turn a wheel until April, because again, just like today, a rain or a snow, it doesn't dry out very quickly. That sun is not powerful. The wind doesn't take the moisture up off the ground very quickly. It sticks around.
All right, well then let's get to the big news, of course. This week, for again, we're recording this right before Thanksgiving, probably won't be released before the end of the week, but this week, as of recording, Donald Trump came out and said that as soon as that he gets into office, he's going to say that we're going to slap a 25% tariff on Mexico and Canada. Now, of course, that's him trying to strong arm both countries to get a little bit of the fentanyl and migrant crisis under control, but who's to say what's going to happen when that time actually comes? And so there's a lot of considerations that people have been thinking about, definitely on the ag side, but talk specifically on the fertilizer because it's not like we produce everything here in the US.
Yeah, it's. I actually owe a few apologies. I had a couple of people on Twitter reach out, and they're like, "So what's going to happen if Trump puts 25% duties on Canada?" I hadn't seen the story. I hadn't heard the news yet. I was like, "There's no way he's going to do that."
Yeah.
Gosh dang it! Talk about eating crow. Not even an hour or two later, I started seeing the reports come out. So it's interesting. I agree with you. I think this is a lot of strong arm tactic. We know that he likes to use tariffs as a weapon, as a negotiation tool. Um, I I still am living in the mindset that we won't truly see these things put into place. But to your point, we have to think about what it does in case it does. And we don't produce everything we need here. A lot of people think that. We start to see that conversation pop up all over online. Well, we don't need their potash. We have potash production here. Guys, we produce a few 100,000 ton of potash. Our demand is significantly higher than that. We do not produce enough. We need those imports. When we look at the nitrogen sector, the we see a lot of their anhydrous flow down in the northern states. We ship a lot of urea north to them. They ship a lot of urea from the west down south to our locations. So there's a little bit of a give and take on that side. Phosphate, it's a one-sided relationship. We ship phosphate to them. That's just end of the story. But yeah, it's going to be interesting to see how it works out. And tariffs, in some cases, work like politicians think that they will, where we're going to make the other country pay for it. They're going to pay the penalty, yada, yada, yada. And that comes down to, does that country have an alternative? When we talk about these tariffs fears against like a Russia, well, when you look at urea, when you look at phosphate, when you look at potash, they've got friendly countries out there. They've got Brazil and India and places like that. They can just ship those places and say, I don't need the US. But when you look at Canada, a lot of their potash flows through the US and out to sea through our ports. Those are going to be subject to tariff. They don't have an alternative there. A lot of their anhydrous coming down here has to come down here. This is without us, they don't have that liquidity. So they will probably have to look at paying more of the tariff than our US farmers will. There are other products that maybe it's going to be more our burden than theirs because again, if you have those alternative shipments, your S&D doesn't change. Well, you're just hurting yourself. So I understand where they come from, but when you get to that level of politics and things like that, if you see a tariff work in one case, well, yeah, it may have worked. Everything was perfect, but that doesn't mean it works for everything. So it's going to be. I hope we don't truly go through this, but if we do, it's going to be interesting to see how it plays out. This is textbook college, econ 101 type stuff.
Yeah, I mean, it'd be interesting to see what potash importers are doing with this if they're taking it serious. Because, I mean, a lot of the news with our current corn export sales, our current soybean export sales with Mexico and China, the news seems to be like, okay, maybe those two countries are going to try to front load potential tariffs that we could see, and they're trying to get ahead of that. So maybe, I don't know, potash does the same, but again, potash imports have also been tracking at a large pace this last fertilizer marketing year. So not sure what wiggle room we have there here moving forward.
Yeah, I think they're already shipping out everything they can. And demand has already been pretty good. When you look at the current price of potash, I'm not going to say it's phenomenal. We've seen lower, we've seen better, but when we look at that price of potash versus a lot of the grain values out there, it's very well suited. It's very well priced. It's probably one of the best valued fertilizer inputs for the farm today. So yeah, it's a lot of that's going to depend. It may not have anything to do with the tariffs. Again, let's go back to the fall I'm sorry, the fall application. If we fall well short, where are you going to go with it? your imports may slow down, and people might try and say, oh, it's because of the duties. And it may just be, hey, we had a poor fall and there's nowhere to go with it. So shipments slowed way down or shut down.
All right, so then you mentioned that too of that value level. What, as a generality, what is our current trajectory almost with fertilizer prices? Because I mean, it seemed like way back when, just a few months ago, that a lot of the rally that we saw in other fertilizer prices, potash didn't really participate in
Mm-hmm.
that. We kind of trended higher from early in the summer slash late spring,
Mm-hmm.
but kind of moving mostly sideways here, heading into the winter.
Yeah, potash is back to being potash. And potash is typically a market that price moves take months, sometimes years to complete their cycle. And when we look at the potash market today, we see more than adequate stockpiles out there, more than adequate enough inventories versus demand. So prices have just flatlined. There's nothing to get excited about. And when we start to look forward, we see new production coming in Canada, expanded production in Canada, expanded production in Russia. China continues to invest in Laos to expand their production because they want to be less reliant on the West. If most of these plants come online or the expansions come online, we're going to go from a very well supplied marketplace to, I would dare say, an oversupplied marketplace. There are certainly things that could change that. I know the Belarusian president was talking about 10% production cut, trying to buoy price ideas. Nobody else has really followed suit, but that does pose a danger. But otherwise, man, it's a very well supplied marketplace, and very well supplied marketplaces just don't need to see their price change much.
Yeah, and even going back to the tariffs, I mean, we already do have some tariffs on fertilizer imports from Morocco. I mean, how much of an impact is that having?
Yeah, it's when you look at the phosphate market, we've currently blocked China, Russia, Morocco. And when you look at the phosphate world, five countries control 85, 90% of the exports. And so the two that I didn't list is the US and Saudi Arabia. What we've seen there is one of the big things everybody likes to sit there and say is like, oh, we're so vastly overpriced versus the rest of the world because of these tariffs. No, we're not. Not on a DAP perspective. If you look at our NOLA DAP price, you convert to metric ton. We are the exact same price as India today, the world's largest buyer. We are about the same price as Brazil. We are not that much higher than Chinese domestic value. So our debt price is relatively close to the rest of the world. MAP, we are a premium. We don't have enough MAP to meet demand. And so we're kind of struggling there. But the DAP, which is the bigger one, it's where it needs to be. But because these tariffs, we block three of the five biggest countries from coming here. When we have a fall season that's massive, we don't have the import flows to refill that system quickly. It takes longer. So now all of a sudden you start to see these situations where today we're level priced. But if we had a big fall, we emptied the system, you'd see us move to a premium versus the rest of the world because we're trying to call every small producer, every small exporter out there to come here. Well, and then when we get to it, we go right back down to the rest of the world. And that's what we've seen is, you go into the spring season, the rest of the world might be doing this. Well, we do this and then catch up. And then if we're doing this, we might go to a premium and then catch back up. It it shifts us out of position from time to time, but it's not 100% of the year type thing.
For sure. And then even with, having restricted imports, I mean, China has been just that big one here for the past couple of years. I mean, the last time we were talking, we were still looking at no phosphate import or exports coming from China. Seems like still a lot of protectionism happening there, especially since their farmers are dealing with poor crop margins. So they got to keep
Yep.
fertilizer cheap enough for them to keep producing their own food, especially as they're looking towards that self-sufficiency in grain production.
Yeah, their two big fertilizer exports is urea and phosphate. Historically speaking, they were the biggest phosphate exporter. If you go back to 2021, they exported about 10 million ton. This year through October, I think they're up around 5.4 or 5.5 million ton. So 2 months, you're not making up a 4.5 million ton differential. They're going to continue to fall short. And yeah, exactly that. There's been some environmental, clean up the environment pushes, which has lowered some production rates, but they've been holding stuff back. Urea is where it's really pronounced. They would normally export around 5 to 5.5 million ton. This year, January through October, cumulative 257,000 ton. They're going to finish this calendar year probably 4.5, 5 million tons short of what they would normally export, and they're 10% of the global export marketplace. So yeah, you're seeing a lot more of the Chinese government. Unfortunately, during that 21-22 cycle, the communist government stepped in and said, "Hey, we need to lower our price, guarantee our own supply. We're going to be communist," and they did it. And for them, it was the best thing in the world. And for the rest of the world, it was the best thing for them, and it worked because now the government says, "Hey, anytime prices go up, anytime it looks to be, tight inventories, we'll just slow or stop. And it lowers our domestic price. That guarantees our own supply. And heck with the rest of the world. We don't care about the West. We don't care about other countries. We're going to take care of ourselves first.
Yeah, it seems like they're willing to do a lot of things at the flip of a switch just for their own benefit, especially. Uh, Kind of a last note here too. I mean, what is still the global outlook looking like, especially when it kind of seems like I know the news today was the ceasefire between Hezbollah and Israel
Mm-hmm.
in Lebanon. Seems like things are trying to cool down here in the Middle East. It also looks like things are heating up a little bit here in the Black Sea. What is to make of all this, especially when we're talking about global fertilizer trade flows?
Well, I like to, anytime I start trying to look at the forward markets, I try to take out wartime events because, again, if you start trying to forecast markets based on, oh, this war is going to do this, is going to do that, that is a recipe for disaster. And I'm not saying you don't watch it. We talk about it all the time, but you don't put it in your expected case. So let's just say all these wars go away. Nitrogen side, we still see that being snug. When you look at urea, again, China exports usually 5.5 million ton. They're barely over 250,000 ton. That's a massive hole in supplies of urea. The European sector, Russia's not shipping natural gas to them. Their price for inputs of nitrogen fertilizer are significantly higher than what they would normally be. In fact, Dutch CPF got over $15 an MMBTU recently. That has us worried we're going to see more plants starting to shut off. They're currently at 75% operating rate, which for urea, it's about 2.5, 3 million tons offline. UAN's about 2 million tons offline. That's another supply hole that could get worse. Um, Russian exports of anhydrous, they're typically the world's biggest. They haven't been there because that pipeline that they use goes through Ukraine and down to Odessa. Well, Ukraine has said, yeah, you're not using that anymore. Russia went from the biggest exporter of anhydrous to nothing. They're not even on the top 10 list. So all this to sit there and say there is a lot of supply problems with global nitrogen, and our demand is unchanged for 25 versus 24. We're still seeing a pattern where prices are probably going to appreciate as we move into Q1, early Q2. Phosphate, it's steady. It's already high price. It's already done a tremendous amount. It didn't even dip like everything else did. Everything else dropped to about a third of its price from the highs in 22. Phosphate only got to 50%. It's rallied up a little bit. We think that's going to stay relatively steady. We see a couple little boosts, tightening on China here and there. That can see a little bit higher, but it's already for November, December. Our price, our NOLA DAP price versus corn is the worst value we've had in history for November, December. Even back in 2008, farmers are paying more bushels for a ton of DAP than they ever have. So it's really hard to see a lot of upside. But again, the demand that's been there is going to limit the downside. And then potash, it's just hard to see that thing really moving higher or lower. If the price dips much more, I think we're going to start having to talk about, is production going to slow down or stop because of profits or lack of. If it goes up too much, I think you'll see the production come online and really cut the knees out from under it. So there's just nothing to get excited about there.
All right. Well, definitely a lot to think about here moving forward. It seems like that always seems to be the case every time we talk. So always appreciate your insights, Josh. And of course, stay warm this week. Have a good
Yep.
Thanksgiving too.
All right, man. You too.